Joining us now to discuss all of this is White House Council of Economic Advisors Chair and President Trump's new pick to replace Fed Governor Kugler, Stephen Miran. It's good to have you, Chair Miran. First, you must be pleased to see another inflation number that comes in a bit light and does not show a lot of evidence of tariff pass-through.
Good morning, and thanks for having me. And yes, I can tell you that we're very happy to see that inflation continues to be well-behaved. Since the president took office in February, CPI inflation has been running at a 1.9% annualized rate, which is a totally normal pattern of behavior for inflation and for prices. And as you pointed out, look, there's just still continues to be no evidence whatsoever of any tariff-induced inflation. I think lots of folks who are expecting that, who are predicting doom and gloom, it just hasn't panned out, and it continues to not pan out for them.
There's a little evidence. I saw it in coffee. I saw it in tomatoes. You see it in photography, equipment, that sort of thing. But to your point, it's not filtering through into the headline numbers. And even the goods prices looked better in July than they did in June. I guess the question, Chair Miran, is it coming? Because a lot of the economists still say, all right, well, these companies are still working off of their inventories. They had months of inventories. They can't absorb it indefinitely.
Well, there will always be relative price changes. There will always be one good or service gets more expensive and another one gets cheaper. That will always happen. But at the aggregate level, when you look holistically across the inflation data, there's just no evidence of it whatsoever. And that's an exact repeat of what happened in 2018, 2019, when, again, the same doomsayers, the same Cassandras were saying exactly the same thing, and it didn't pan out for them then. Thus far, it's not panning out for them again. Could it happen in the future? As I've said before, never rule out anything, but thus far there's no evidence of it, and the entire burden of argumentation is on the people who have been waiting since January 20th the tariffs began, right? It's been a gradual process of different tariff regimes, but we started putting tariffs on various countries on January 20th, and still hasn't panned out.
No, it hasn't panned out, but one thing that did surprise people, what core numbers were a little bit hotter. I mean, nothing crazy, nothing extreme, but that core number is now the highest year over year since, I believe, January. So what does that tell you? I mean, does it concern you at all that it looks like the inflation numbers pretty much bottomed earlier in the year?
Well, let me say a couple things. First of all, if you look at core, as you just mentioned, two of the strongest categories in this month in terms of inflation were used cars and airfares. And neither of those have anything to do with tariffs. We don't import used cars from abroad in large scale, and airfares are on domestic services, basically, right? So they couldn't be farther removed from things. In terms of core overall, look, we've been doing a lot of thinking about just how much of this inflation is due to the illegal immigration that's occurred in the last few years. Our calculations are that the massive insurge of renters into an only sluggishly adjusting housing supply probably boosted rents by about 4 or 5%, right? And that's a significant contribution to overall inflation at a time when the housing stock adjusts only slowly, inflation is very strong, and you've basically got an unchecked border with people just streaming over this country. So we think that there's a very strong reason for thinking of very profound service disinflation coming up in the near future as net migration has come to zero because of the president's strong border policies and as we start sending numbers of them home. Right, and that's on top of the president's other policies of deregulation, expanding the capital stock through the incentives for investment in the One Big Beautiful Bill, energy abundance, keeping energy prices down. There's a whole of government approach to disinflationary policy that's going to be working its way through the inflation data and having a very profound effect in the near future.
Why wouldn't used cars and pricing in used cars be affected by an increase in prices in new cars?
Well, but there was no increase in prices in used cars this month in any material sense.
As an overall working theory, wouldn't you assume that if new cars get more expensive, people would turn to used cars, which would then inflate their value?
Yeah, they're substitutes, and a logic like you're describing would happen if the price of used cars had been going up, but the premise is false. If the price of new cars had been going up, but the premise is false. There wasn't any material increase in new car inflation on this month, which means it's just an aberration of the data, or maybe it's sort of, previous lags, correlation between different measures of used cars working their way through the system. But it's just really difficult to get to a point at which you could say any of the inflation is due in any economically meaningful sense to the tariffs.